Hi guys, so I'm doing a video on chart pattern, guys. This video will be about chart pattern on how we see chart patterns. So there are different type of chart patterns, and I have an image right around here. We can see, let me change the color of that. This image right here, there are different kind of chart pattern. So I'm going to explain what chart pattern is, and I'm going to show you guys in how it looks like in the real market, because the drawing is a little bit different from how it looks like sometimes in the real market. So now let me make this bigger. So we can see this is chart pattern right here, and there are various kind of chart pattern. As we can see, we have reversal pattern. Let me change to, we have what we call the continuation pattern. So these are the mainly two that I actually used. I know on this image it says bilateral patterns. Sometimes I don't use symmetric. Let me change the color of that. I don't use symmetric, but sometimes I use ascending and descending as well. I don't use the pendants, so I'm not going to talk about this one. So there's some certain ones I'm not going to talk about, like the pendants right here. I don't use that. So and the symmetric, so I'm not going to teach you what I don't use. It doesn't make sense. So so reversal patterns, right? Reversal patterns are just patterns that shows on the chart when that shows that it's going to reverse, right? Like example, if you're pushing to the upside, right, and we see a certain pattern from the up move, this is an uptrend, then we see a certain pattern going to the upside, right? And if it's showing us some certain pattern, there is a possibility that we might reverse from going to the up move now to the down move, right? Those are reversal pattern, just explanatory, just as it says reversal, right? Then continuation means we're going to see some certain patterns, and it's just going to show us that we are still going to continue on the same direction we are coming from. So basically that is just like there might be a lot of patterns out there. Like I said, you can see this one also included the bilateral pattern, but like I said, I don't use them. Mainly I just focus on the reversal and the continuation pattern. So there are a lot of like patterns out there. You don't have to use everything. You just have to be able to use the ones that you see most of the time in the instruments you are trading, because there are a lot of instruments out there, and there are different patterns that come out of the instrument. If you've been watching my videos, you know I like to trade gold, I like to trade DXY, and I like to trade GU, and once in a while I upload crypto as well. So like these are my own main pattern that I see based on what I trade. That is why it is good for you to backtest a lot. When you backtest, you'll be able to know the kind of patterns that form in the instrument you trade, and that is why you don't have to know all this pattern. You can see the pattern right now so that you'll be able to identify the pattern you continuously see in the instrument you trade, either forex, crypto, stocks, synthetic, and all that instruments, right? So you, like, I'm going to repeat myself again, you don't have to know all this pattern. Just learn this pattern right now, backtest the instrument you use, and know the kind of patterns that show in the particular instrument you use. So like we can see right here, so I'm going to talk about the first right here. We see the first one here, it's the reversal pattern. We have the double top. I think the double top is a really common one, meaning an M shape. So they call it either the double top, aka M. So the M pattern, right, is a reversal pattern, meaning we can see a direction pushing to the upside, right? Then it pushed to the downside a little bit for us to see. Then it goes and push up a little bit. Then we push to the downside. So we can see that the direction is coming from the upside right here, the uptrend. Then it shows us the W pattern, meaning we are reversing. So now we are now on a downtrend. So basically that is how we will look at it, right? So now I'm going to show you another one again. We can see that we have the reverse of an M is a W. We have a double top, double bottom. A double bottom is just a W, right? We can see 1 and 2, so we call it a double bottom, also called a W. Just similar, right? It's a reversal pattern because we can see that the first direction is pushing to the downside. Then we have something like this to show that it's pushing to the upside, and it comes down again, showing as if we are pushing to the downside, and we actually see another move to the we can see another move to the upside, right? So that is a reversal pattern. Then we also have something called the head and shoulder. We have the head and shoulder, which is this around here, right here. The head and shoulder just actually indicates that we'd see it's also a reversal pattern because we can see we are pushing from we are pushing to the upside, right? It pushed to the downside just to show we are pushing to the downside. Then it goes up again and puts and give us like a break of structure. After then it pushed down again, right? After pushing down, we went pushing down, right? It went up again, then finally pushed to the downside. So we can see that it went from uptrend to downtrend. So it gave us, like, we can see it gave us the break of structure, and we will basically assume that we are continuing to push to the upside because it gave a break of structure, right? Then we can see it went down, it went up again, and it probably kind of aligned with the previous. So the head and shoulder, this is the left head, sorry, left shoulder. Did I just say left head? Left shoulder. Then this is the right shoulder, and this is the head. So that is why they call it head and shoulder, guys. So this is the head and shoulder. Then we have another one called inverse head and shoulder, and just like inverse means like the opposite, right, of what we did, which means we can see we are pushing to the downside. It gave us this shoulder, went down again, break structure, look as if we're going to continue to push to the downside, right? Then it went up a little bit again, right? After going up, it went up, came down again, right? And continued to push to the upside and broke the previous structure right here. So this is called a inverse head and shoulder. Right, head and shoulder. So we can see that is how the inverse head and shoulder works. Then we have another one called the rising wedge. Rising wedge is also a reversal pattern. Rising wedge, that is also a reversal pattern, and it's a reversal pattern because we can see it pushes to the upside, right? Then it's giving us some sort of correction like this. This is an uptrend. Then we can see it breaks the previous one, give us this kind of a lower high, right? A lower high. Then it continued to tank to the downside. So that is why they call it a rising wedge, right? That's why they call it like that. Then we have another one right here. It's called the falling wedge. The falling wedge is also similar, right? The reverse of it. So we can see that we are on a downtrend. It gives us some sort of something like this. Then we're going to come here, break structure right here. So we can see that this is the falling wedge. So this is a downtrend right here. Then when we reversed, we started pushing to the upside, right? So this is the uptrend. So this is just like, I hope you guys understand, this is just like a very simple way to understand how the pattern works. Then that is for the reverse that we have here. Then the continuation pattern, right? Continuation pattern is just as you know it, meaning we are pushing to the the market doesn't just go in a straight line, right? It comes and possibly give us a retracement before pushing to the upside or downside. So the retracement that shows that shows the chart pattern. So is the retracement that actually make you know whether we are going to continue, it's a continuation pattern or a reversal pattern. That is how you actually identify patterns to know. I hope that I just use this in a layman time. Hope this is really simple for you to grasp, guys. So now let's talk about continuation pattern. The first one we have here is the falling wedge. So the falling wedge of a continuation. So we are pushing to the upside, guys. This is an uptrend right here. Then we have a falling wedge, meaning the retracement fell, right? Give us some sort of like this. Come back here, retest, break structure. So this is a continuation trend, right? We see that we are pushing to the upside. It came falling wedge, meaning it falls a little bit, broke the trend line, retest the trend line, right? And continue to push to the upside, and we still continue to push to the upside. So that is why we call it a continuation pattern. So the second one is the rising wedge. So the rising wedge is basically continuation pattern as well, meaning we are pushing to this downside. Rising wedge, just the opposite of what I just explained, which is the falling wedge, meaning we are pushing to the upside, right? We broke the trend line, retest the trend line to give us a lower high right here, right? Broke structure, and we can see that it was pushing to the downside, and the continuation is also the downside. So that is why we call this a rising wedge. So now this is a bullish rectangle. So the bullish rectangle is a continuation pattern, and I'm going to show you how that works. We can see we are pushing to the upside. It gave me some sort of a rectangular pattern right here, and that is why they call it rectangular pattern. So it gives us some sort of like this, right? It comes here, push up, retest, break structure, then still continue to push to the upside, uptrend as well. So that is why they call it bullish. Bullish is just uptrend, right? I'm just going to say this for those that they're just new to trading. Bullish is also uptrend. So we can see a bullish rectangle, meaning it's going uptrend, and the retracement forms a rectangular shape. It forms a rectangular shape, and that's why they call it a bullish retracement, a bullish rectangle. So now we have the bearish, just the opposite, like I said, the bearish rectangle. And basically the bearish rectangle is just a continuation pattern, just the reverse of the bullish. Bearish is also a downtrend. I'm just saying that for those that does not know the terminology of trading yet, in case if you're watching it and you're new. So we can see that we are pushing to the downside. It gives us the rectangular pattern right here. Push, break structure, retest, right? Give us a lower break structure, give us a lower high. So we can see that we are pushing to the downside, and it also continued to push to the downside. So the pattern right here, let me change. Pattern right here just shows the retracement, shows the pattern. So that is how you actually know. You let it retrace, and the way it's retraced will determine the pattern, guys. So like I said, I don't use the bearish pendant and the bullish pendant, so I'm not going to talk about that one. and I don't use the symmetric triangle as well, so I'm not going to talk about it because I don't really know much about that. So but I'm going to talk about the ascending triangle and the descending triangle, guys. So basically that is bilateral. Just actually mean this is a bilateral triangle, right? This is just actually means that we might push to the upside, we might push to the downside. If you've been doing trade for a while now, you will know that sometimes the market is really indecisive, meaning it just gives us we are not seeing any bias. Like, it just gives us some sort of like a 50-50, that we can see it pushing to the upside and we can see it pushing to the downside, and that is our bilateral pattern is. So for bilateral patterns, right, for the ascending pattern, we can see ascending pattern just basically shows us that we are pushing to upside from here, right? So we are pushing to the upside. It gave us some sort of like this, right? So we might push to the upside, or if it breaks here, we might push to the downside. And in this kind of pattern, we just have to be patient to see. So taking a trade like this means we have to see a break of structure. It's really important. So if it breaks to the upside, we're going to buy, and if it breaks to the downside, we're going to sell. And that is our ascending patterning, meaning the pattern is we are seeing indecisiveness in the market. So we have to wait for more data for us to be able to know the direction. That is what bilateral pattern is, right? So for the ascending, it's coming from the upside, right? Then we can have either uptrend or a downtrend. That is ascending pattern, guys. So for the descending pattern, we are actually coming to the downside, push up or push down. So descending triangle. So we can either push to the upside or to the downside depending on how it works, right? So this one is going to the downside, and we can either push upward or downwards. So that is what the descending pattern is, guys. So these are like the patterns that mainly you see in most of the instrument, but like I said, it's not all the patterns that show in the instrument, to be honest. Some few shows more than the other. You just know it. Like I said in the beginning, practice it based on what you are trying to trade and master it. That's just because it works, guys. There, like I used to say, like there is no 100% oligarchy right here. Sometimes it shows the pattern and it doesn't work, and sometimes it does. But I just think most times when you show the pattern, it works more time than few. So few that fails, because nothing is 100%, guys. Nothing is 100%. So that is just how chart pattern works, guys. So I'm going to show you chart pattern on the actual chart because it's kind of different. It is different, guys. It is different. How you see it a little bit is kind of different. Like this one we are seeing right here is just like how textbook works, right? So this is just like how textbook works. Most of the time it is not as clean as how it looks right here. It is not as clean to identify. How it looks like there is very clean to identify, but in the real life market, guys, it's not as clean as this. So I'm just going to show you how it looks like in real life, and I repeat myself again, guys, please back test it and see how it works in the kind of instrument you use. So for this example right here, I'm going to be using the DXY just to show you the patterns that I see. Majority of the time, the patterns that shows on DXY are like the double top, the double bottom, falling and rising wedge, and maybe sometimes you see the bilateral pattern, which is the ascending and descending pattern. So that is once in a while, but I'm just going to show you. So majority of the ones that I use, like I said, is the top pattern, right? Which is the W pattern. Like there are various, I mean like various patterns of W and an M pattern that works in majority of like the DXY, the GU and the gold. Like I said, that is what I trade. DXY, GU, which is pound dollar, and gold. So it works. M pattern is like crucial. Like that's one of my top analyst chart pattern that I like. Double bottom and double top. I like it. Once in a while I see head and shoulder. Once in a while I see head and shoulder. I hardly see reverse in the shoulder. I mostly use the double top. The double bottom rather than the head and shoulder. The inverse head and shoulder. Like I said, the falling wedge and the rising wedge. I use this. I use this. So the ones that I see most of the time. So the ones I see most of the time are this. I'm gonna check it. That's this. Like I said, for what I am trading, guys. For what I am trading, and that is why I'm gonna repeat again. Do your analysis to see what forms majority in what you trade. So I hardly see this one inverse head and shoulder. Once in a while, I see head and shoulder, not all the time. So this is just like an half. I don't see it all the time. Then for my inverse, right, for my reverse pattern, this is what I use. Just check, and this one as well. I hardly see this, and I hardly see this, and I don't use this. Just like I said, I don't even see this at all. Because we can, this look just looks like the falling wedge and the rising wedge. So maybe I see it sometimes. I just assume it's the rising wedge or falling wedge. I don't know, but that is what I use, guys. So I'm just going to show you, like I said, in the actual market on how we see it most of the time. It's not as smooth and it's not as clear as we are seeing it, and I'm going to explain why. So let's look at the double top, right? Let's look at the double top. So we can see right here, this is a double top, guys. This right here is a double top. It's a double top. So we can see that if we want to take this trade on this double top, right, we can see that it has to be on a key level. We can't just take the trade just because it's on it's double top, right? It has to be on a key level for us to know that it's valid. And that's why even in anything you use, I don't advise you just using one thing to trade. Have more confluences. The more confluences you have, just gives you high probability of what you want actually working, right? So assuming it's just a double top on a random place, it might not work. But like I said, if you have confluences that backs it up, then there's a possibility it will work. Let's look at this pattern right now. We are looking for the M pattern, which is also known as the double top. So first of all, I said this one is a really valid one, and one reason is because we are on a key level right here, on a key zone right here, which is a sensitive zone. We can see that based on the price and the price action, previous price action, whenever we get to this zone, there is kind of a retracement around the zone. So when we get to this zone right here and we see a double top around this zone right here, giving me the M pattern, there is a possibility for it to actually work out, because you're not just seeing a double top at a random place. We are seeing it in a significant area, right? And as soon as we see its double top right here, right, we can take the trade around this area, right? We see the wick coming here. Right here is a solid way to take the trade, right around here. We saw this right here, right? And it wicks up a little bit, but we can see before it actually wick right here, it has given this double top based on this candlestick right here. Double top. If I use a trend line, like I said, that is what I'm saying, like it's not as clear sometimes. Let's remove this one. Let's assume this weak rejection wasn't there, because this weak rejection almost aligned with this one right here, right? But let's see it how it comes around this area right here. We had this impulse right here. It went up a little bit to give us the double top. We have this engulfing candle right here, this engulfing candle right here, right? And we continue to tank to the downside. This also pattern right here that we are seeing is an M pattern. It gives us something like this. Come here, give us something like this. Yes, I know it is not accurate. Like, the pattern is not accurate. That is why I'm saying it doesn't have to be at it. It's not parallel. Sorry, that's what I want to say. Parallel. It's not parallel, and that is why it's okay, but we still call it the M pattern, right? So we can see it's not parallel, but it's giving us the lower high right here, the lower high right here, right? So we can see that it's still an M pattern. This is called an M pattern, even despite the fact that it's not parallel. But we know how to draw an M as to be kind of parallel, right? It has to be parallel, but in the real life market scenario, most of the time it is not parallel. You just have to identify that it's an M pattern, even despite the fact that it's not parallel. Sometimes it is and sometimes it's not. So that is one example right there, guys. I can see another one right here that is also an M pattern that is not parallel. Most of the time it is not parallel. This is an M pattern right here, and it is not even parallel. We can see it give us something like this, give us something like this, and it's right here. So you just have to train your eyes to identify it. And how do you train your eyes, guys, to identify it? Practice, backtest. That is how you train your eyes to identify it. So now let's look at the double bottom. These two, I'm telling you, like, these two reversal pattern are holy grail, and I see it in majority of the forest instrument, even Bitcoin as well. It's there, like M pattern and W pattern. If you learn it, it can actually change your trading game, guys. It can change your trading game. It's one of like the greatest reversal pattern that I know, and that works majority of the time. M and W pattern. So this is a W pattern, guys. Right here we can see, and just like I said previously, in the real market it's not always parallel. It's like, you can hardly see it being parallel, to be honest. It is like 95% not parallel. So we can see this is a W pattern right here that forms, retraces, and continue to push to the upside. Just like I explained the other time, we can see we had this came up here, push up, break structure, went down a little bit to retest for us to continue to push to the upside. And trust me, some people that see reverse head and shoulders also see reverse head and shoulder right here, which is this reversal pattern that I showed you guys right here. This one right here, some people that likes to look for it might use this as a reversal pattern. We can see it has an impulse, right? It has this continuation. It came up a little bit, went up, came up here, and came up here, right? So we can see this as a inverse head and shoulder. Some people will see it as that, but I just see W pattern. That is why just look for anything works, guys. Like, just anything you want to see, just see it as long as it works for you. So this can be called the left shoulder. This can be called the right shoulder. And this right here is the head. So people that like to use the reverse head and shoulder, they'll rather see the inverse head and shoulder rather than this WIC. But either way, it works. So just use what works for you, guys. So that is another one that I use, that I see. So now let me look for, we can see another W pattern. Like, this pattern is amazing, guys. It's amazing. We can see right here, we can see this is a W pattern as well, and we can see after we saw the W pattern, it reversed and tanked to the upside. So it actually really works, guys. It does really work. We just have to be able to identify it in the market. We have to be able to identify it in the market. So now let's see another one that works as well. So another one that I really like, and I know people know about it because that's just like a general way of knowing an uptrend or a downtrend. That one is also very common. If you're watching a lot of how you start on charts. You know, like the uptrend is basically just an impulse, a correction, and a continuation to push to the upside. That is how you know an uptrend. A downtrend is just an you can see something like this, correction and push to the downside. Majority of the time, this is how they just shows how to identify an uptrend and a downtrend based on how the price action looks like, right? So that is very simple. We can see it's one around this area right here. This is a falling wedge for a continuation move to the upside. We can see which is this right here, a falling wedge, which is this right here. So we can see that we had the impulse, a correction of a falling correction, and continue to push to the upside. So majority of the time, that one is really, really clear. We all see that and all that, and we see. So let's look for another one that has it as well. So we can see right around here too. If I draw a trend line right here to here, you can see we have this impulse, we have this correction, which is a falling wedge, and continue to push to the upside. So that's really, really common, a pattern for us to see that we might continue to push to the upside based on that. So now let's see another one that is very common, which is the ascending the rising wedge and the falling wedge for reversal pattern. So we can see that okay, for the rising wedge, right, for down move, so this will be the rising wedge for continuation pattern, which is this right here. So it's here, an impulse, a correction, push to the downside. Like I said, it's not always that clear, but you can always know based on how you analyze. As much as you analyze, you will know how it works, right? We can see another one that looks similar to the textbook, something like this, then push to the downside. Let's see if I go to a smaller time frame to see, maybe I can see a much clearer one. Just like I explained to you guys, like it's not always clean like the textbooks most of the time. So let's see if I see anyone that for the downtrend. So we can see right here for the downtrend right here, it's no, that is not clear enough. So this is another one that I see that might work. A downtrend, some sort of something like this, broke record, came to retest, give us the lower high and push to the downside. So you can see that is not as clean as how the textbook make it looks, which is, yeah. So it's not always that clean. You just have to train your eyes to actually identify it, guys. So that is a falling wedge. What else do I want to see? A rising wedge, sorry. What else? Have I not talked about? Okay, I have not talked about the bullish rectangular. So this is the rectangular patterns. For the bull and bear directions. So this one is not really as common as the other one, which is the falling wedge and the rising wedge that I mentioned, but a continuation pattern does not have to be an impulse, a sort of a correction like I drew earlier on, or something like this, right? A continuation can also be, we just have an impulse, give us this sort of a rectangular pattern and still push to the upside. This is the same thing, guys. And or we can see something like this, give us this rectangular pattern and push to the upside. So sometimes it does not actually have to push up a little bit before pushing the, that is not just what we call retracement. This is also the same thing, guys. So we have to watch our eyes for us to know that as well. So let's look for a pattern like that, because we have a lot of patterns. that shows something like that. So let's see. This is one pattern, right, guys? This is one pattern right here. An impulse, a correction, you see, and continue to push it downside. We can see that it was just consolidating around this area right here. If you use this two rectangle shape just so I see, we can see that it's just giving us an impulse. It corrected on the ranging side. It wasn't pushing to the upside just like the similar one that pushed to the downside. No, we just see that it has the impulse, gave us this range in the market, pushed down, came to retest, give us this lower high, and continue to tank to the downside. That is one example of a rectangular bearish pattern. And another one, let's see another one. This is another one, guys. Let's use the rectangular one to identify it as well. We can see here, we can see right around here. So we can see what it did. We had this impulse, this correction, it just ranges, tank to the upside, gave us, let me see if tag to the upside, give us this lower high right here and push to the downside. So that's the pattern how it looks like. We can see it give us this rectangular pattern and tank to the downside a little bit. So that is how you identify the bearish rectangular pattern. So let's look for the bull rectangular pattern, guys. So this is one example of a bull rectangular pattern. Like I said, it's not as clean as we see it on the textbook. We can see this is a rectangular pattern right here. Broke structure, give us a an higher high and continue to tank to the upside. So it's not as clean as we see it, but this is considered a rectangular pattern right here. An impulse rectangular pattern, then tank to the upside, right? Give us the retest, continue. We can see it give us this higher low right here to continue to tank to the upside. So that's one example of a rectangular pattern. And there is another one right here too. An impulse, a rectangular pattern right here, then push to the upside. Like I said, it's not as clean because it's not, majority of the time, it's not clean like the way we see it in the textbook. So we have this, give us a rectangular pattern, tank to the upside instead of pushing to like instead of pushing like a falling wedge and pushing to the upside. So that is a rectangular pattern shape on a continuation move. That is how it looks like I said, it's not clean most of the time. You just have to train your eyes to identify it. And how do you train your eyes to identify it, guys? Practice. You just have to practice. I know it sounds cliche, but you just have to practice to be able to know it. So now let's see, let's talk about, so guys, we're gonna talk about reversal pattern which is we're going to talk about the rising wedge, and so we're going to talk about the falling wedge. That is what remains for us to talk about, right? So it's just basically how you see how the overall market is actually doing. So we can see right here that this sort is giving us a falling wedge. We've been pushing to the downside. Let's see this one right here. See how that looks. We see we have this impulse right here. We have this continuation right here. We tank to the downside and it's giving us some top of like a falling wedge right here. If I zoom in a little bit, we can see, and some people call this falling wedge divergence as well. So we can see how it works. It works something like this, giving us something like this. I hope you guys understand me this because sometimes it can be tricky. So this is called the falling wedge, and some people call it divergence. So that is how we know how falling wedge looks. It gives us like we are going to the downtrend, but because it's now trying to reverse, we see some sort of like a weak rejection, and the pattern of that weak rejection looks as if it's falling, right? And for us to just have more confirmation around this falling wedge, we need some sort of like a breakout, break and retest, right? A breakout and break and retest, or break and retest, for us to know if we're going to continue to push to that upside. Because like I said before, like nothing is 100%. Sometimes I see falling wedges and I think it's going to go up and it doesn't, but like I said, most of the time it does, and that's what that matters. It does most of the time. And that is why we need confirmation for us to know that we're going to continue to push to the upside. So just like this example that I showed you right here, we see the falling wedge around this area right here, and we've been on a downtrend, right? You see that we tanked up a little bit before we actually see the downtrend. But like I said, we can't just use it based on that. You have to look for it has to be on a key zone. If I look at that one, it's certainly on a key zone. Let me zoom a little bit. We can see, let me draw it right here. You can see that's in the key zone. So just don't use it anywhere, because it has the higher chance of us being accurate when we are on a key zone, rather than just a place that it's not a key zone and it's showing a falling wedge. It might not work out, but because we're on a key zone and we're seeing that falling wedge, there's a possibility that it might work out. Just like what I showed you right now, we can see based on the prior price action, we can see that we've been rejecting around that area for a while. So coming here and seeing a falling wedge around that area right here, it's one confluence for me that we might push to the upside, right? So that is why we have to always look for key areas. That is key area number one. So taking this trade now, I see the falling wedge. That is one confluence. Falling wedge, confluences. I see the falling wedge. That is number one confluence. Second one is on a key zone / area. That is confluence number two. Number three, it's give me the double bottom. Then four, I'm going to wait for a break of retest or break out, because some people don't like break of retest. It's just like, as long as they break out of the zone, some people take the trade, but I wait for a break of retest. So this is a confluence for us to take the trade, guys. This is what you see for me to be able to take that trade. So I'm not just taking the trade just because it's falling wedge, because sometimes, trust me, looks falling wedge, push up a little bit and just tank to the downside. That's what I'm saying. Like the more confluences you have, there's higher probability of it actually working. So for us to take that kind of trade, that is the confluence I see that made sense, and we can see that we tanked to the upside. So that is that on falling wedge. So now let's look for rising wedge. That is also a very common one as well. So this is an example of a rising wedge, guys. We can see right here, look at how it goes. We had this impulse, we had this rising wedge. Look at how it forms. Then what did we do? We tanked to the downside. Even despite the fact that we still push up, right, we see that we continue to tank to the downside. So that is an example of rising wedge. So like I said earlier on, if I use a trend line right here, like I said earlier on, guys, you can't just take trade based on that. You have to have confluences for it to make sense for us to know. So let's see whether this rising wedge will work or not. If I draw my rectangle right here, we are on a key zone right here. Based on the previous you can see, if I look to the left, which is this is around look to the left, you can see there are rejections around that area. So there's a possibility that if you have a reversal pattern around that area, it might work out. I'm using might, like I said, nothing is 100%. It's the chance of probability. So we see one confluence, we're on the key zone right there. Another confluence is we continue to have multiple rejections around that area. I know I talked about double top, but this is like a triple top, which is also a very significant and strong reversal pattern as well. It doesn't show in everything, but once in a while it shows. So we have a triple top. So these are the confluences that you see that make me will take this trade. One, confluences to take this trade. We have a rising wedge. Two, on a key zone / area. Three, we have triple tops. We have triple tops around that area right there. Four, we had the break and retest of trend line, which is we see right here. Break here, came here, break here, retest this trend line right here to give us the lower high and tank to the downside. So if we take the trade right around here, and the fifth confluence is we can see that if we break the structure, came back to retest, right? Even though that we did not actually retest off of the trend line, we came to this imbalance right here. If I draw a line, this is an imbalance right here. So we came to retest that imbalance. So retest of imbalance. So this is a perfect trade to actually trade and ride it to the downside. And if you've been watching my analysis as well, you know that I like to use Fibonacci as well. If I draw a fib from right around here to here, I'll possibly take my TP around this area right here, because this will be around like my negative 27% fib level right here around the fib. And if you want to know how to draw fib, guys, I have a video on that. Please check it out. It's very informative. So that is how you can use chart pattern on your actual trade, guys. You just have to practice more and do more retests for a forecast, I mean, for you to be able to identify it whenever it happens. Because like I said, it's not as smooth as you are seeing it is in this image. It's a little bit tricky in the real scenario, but the more you practice and the more you see it, the more your eyes will be accustomed to it, and you'll be able to know when it plays out, right? So that is my chart pattern video, guys. Hope you find it interesting. If you do, and if you like it, and if you gain any knowledge, please share, please comment, please like. It helps me a lot when you share, when you comment, and when you like, and I'll be able to do more knowledgeable videos out there. And this is we are going to 2024, guys. Like, we have to start learning new things. We have to be more serious about what we want to do for 2024, right? So this is a good start to also know about chart pattern, guys. Hope you really enjoyed this video as much as I enjoyed making the video. Please don't forget to like again, subscribe, comment, and share, and I'll see you guys in my next video. Thank you for watching, guys. Bye.